Good morning. It is 6 o'clock, half an hour before the market opens on Tuesday, July 2nd. Yesterday, we were talking about how this week is probably going to be very quiet, not a lot of action. We're probably just going to chop sideways and on low volume. So nothing super crazy. We're not going to expect huge movements unless it's on very low volume, which means it's manipulated and we will just expect it to come back. So this morning, we're probably not going to expect anything too different. And if that's the case, then we'll take a look at some of the stuff we were looking at yesterday. Like we identified the one strong sector that seemed interesting was XLC, and the 1 week sector or the 2 week sectors that seemed interesting were XHB and XLB. So we'll go through our motions, and if nothing really jumps out at us, then we'll take a closer look at those and maybe get a trade idea out of it. We'll start out with our futures as usual. And down, definitely a downward bias in the market today. We've got about 45 basis points on the S&P 500, about 55 on the NASDAQ, and the Dow about 30 to 35. So they are all moving in the same direction and very similar degree. That's interesting. That's the second day in a row where the normal relationship has been preserved. That is telling me that equilibrium is coming back into the markets, and we don't have that huge disparity between the NASDAQ and the Dow anymore, or at least the last 2 days we haven't had it. So it looks like things are normalizing. So I don't care so much that these are downward facing and downward bias. I care about the relationship between all of them, and those are starting to normalize. That's good news for the markets. Now, all of these, well, not the Dow. The Dow is on the verge of being non-random. The other two are non-random, so there's definitely a negative bias in the market this morning, but I wouldn't get too excited about it. I don't think that's significant in magnitude, at least not yet. Yeah, if we look at the pre-market, you can see that if we open right where we are on those, what those futures are indicating, then we're just basically kind of near the bottom of yesterday's bar. So we're near the low of yesterday. That's it. So what does that mean? It means we're chopping. We're chopping still. Even if we trade down to that EMA 20 today, that's still choppy movement, or even a little bit below that EMA 20. So I'm not going to get too excited about the fact that they're down non-randomly, just that their relationship is normal. And this week we still, despite the downward bias, we're still expecting choppy movement to the side. That might change based on what Powell says, because he is, let's close those, he's speaking this morning in about half an hour. So that's going to coincide right with the market open. That market open is going to be volatile anyways, but if he says something really weird or that really gives people an indication of where interest rates are going, then we could see some movement. Now, what does he speak about? He speaks about interest rates, or he speaks about Fed policy, which is basically they only have one tool. They have monetary policy. They decide interest rates based on inflation rates and unemployment rates. The only thing they can do is move interest rates higher, move interest rates lower, or keep them the same. That's their only tool. So interest rates, what will those affect? Interestingly, most directly, they will affect TLT. The TLT looks like there's a little bit of a rebound this morning. That's okay, because where is it bouncing up to? It's bouncing up to the top of this channel. Do we expect it to fly right back up? No. I would expect it to, at the very least, get challenged at this channel, get challenged at the MA50, and then at that point, it's filled half of the gap right here. Oh, and then that might be it, and it'll peter out, come back down. If that's the case, that'll give us an opportunity to go back into a short, because yesterday we said we were going to close it. Now, if we couldn't close it until this morning, it looks like we might miss our mark a little bit. But again, there's no there's nothing to say that today we won't trade back down. If not today, over the next couple of days, few days, if we've already hit this level today, then it shouldn't be too long before we revisit it. So we're not going to get too excited if we don't get a chance to exit our TLT positions today. We'll just keep the level the same, and maybe tomorrow or the day after we'll be able to get out and then wait for an opportunity to re-enter the position. So what I was saying is that Powell has most direct effects on interest rates. Interest rates most immediately shows up in bonds, more specifically short bonds. So they set the overnight interest rate. The next maturity above overnight is 1 month T-bill at the short end of the treasuries, but all of them get affected. That's why you see movement in the TLT based on that. So we see this movement downwards. If just say Powell says something like, well, we're still waiting for data and we're still staying the course, and we expect maybe one, if and any rate cut this year. Well, that's going to wake us up even more to the fact that we're not going to get a rate cut in July. We're still at 8.8 after all this. We're still at 8.8. That's amazing. But that needs to get down close to zero. So this will keep on dropping. And interest rates, what do they affect? They affect utilities, they affect technology. Most directly, they have an effect on financing rates. And financing rates will be things like credit cards, there'll be things like home loans, and so new home purchases really get affected. A lot of people are waiting to buy a new home. They're waiting for mortgage rates to go down because the Fed last year built up this huge expectation that we're going to have rate cuts this year. And so far, we've gotten 0. We were promised 6. Analysts were pricing in 8. And then now we're down to the Fed saying 0 to 1. Right? They backtracked to 3. Then they said 1. And now we're at 0 to 1. So there's all this anticipation built up. People saying, hey, I'm going to wait. I'm not going to buy a house yet because I'm going to wait for those rates to come down. And those rates just have not come down. And home builders have been waiting and saying, okay, well, let's ramp up. People are going to start buying soon. Let's ramp up. Let's start building. And they built up all this inventory, and people aren't buying because those interest rates did not come down. And so yesterday, it was not a big surprise that we identified home builders as one of the weakest sectors, and a sector that is breaking down. You see that sharp breakdown, sharp move below the support that we had right here when we threw the volume profile up. We said we finally broke through this large pocket right here. And now it has clearance to keep on moving down. So home builders will right now, because they made that breakdown move, we didn't see it on Friday, but we definitely saw it yesterday. And with our expectation that TLT is moving down to the bottom of that channel that we had, or at least halfway down to the bottom of the channel, then in this next month, in the current month, then home builders are going to feel that pressure as well. The XHB. We're probably going down to the MA200. Most likely, if not, then just maybe there, halfway to the MA200. But I'm pretty sure we're going to make it to the MA200. And later on, we'll see. Maybe we'll break through the MA200. But this is a nice, juicy movement right here. Yesterday, I was only seeing TLT, but when we looked at the aftermarket session and we saw this big drop, then we're like, oh, XHB is starting to get interesting. XLB was starting to get interesting as well. And they all fit the same picture. This is just a variation of the same theme. Oh, interest rates higher for longer. Same reason why TLT is dropping is the same reason why XHB is dropping, and actually is the same reason why XLB is dropping, but perhaps not as strong, because XLB, see, you can see this chart looks very similar to XHB. And why? Basic materials are anything that are not an end product by themselves. They go in to build other products. For example, steel. No one buys steel just to have a hunk of steel laying around. People buy steel to make things out of the steel, like chains and nails and girders and cars. So the steel doesn't sit around and just stay steel. What else is in the material sector? What fits that definition? Well, cement, concrete, wood, lumber, nails, screws. All of those fit into XLB, and all of those are materials that are used in home building. It's not the entire sector. There's a lot of things that are not used in home building, for example, chemicals. So we don't expect as strong of an effect on the material sector, but obviously it is having an effect. So we can look into XLB, we can look into XHB, we can look at bonds. Bonds gives us limited choice. We basically have a couple of ETFs that we can play around with, but the juiciest moves are going to be in the weakest stocks in the weakest sectors. We can start looking at home builders. We can start looking at materials, weak stocks in these two sectors. So actually, let me finish going through the overall markets just to make sure there's nothing that interesting before we keep on going along this thread. So you can see that pre-market, we actually did hit this purple line, which is the low of yesterday that we bounced off of. We did not draw this line yesterday. We drew it, I don't know how many days back, but potentially several weeks back. And we bounced off of that line. We're bouncing off of it again this morning. We are down, and normally our expectation with about 70% conviction is that we move towards the previous day close. That doesn't mean we move towards it all day, but at least in the first 1 to 2 hours, we have a tendency to move towards the previous day close. And since we don't have a lot of levels here to worry about, we might move quite a bit to the upside before we stop and pause and decide which direction to move next. However, it is one of the quietest weeks of the year seasonally. The only one that's quieter, I think, or the only ones that might be quieter are Thanksgiving weekend and the New Year, end of year, Christmas week as well. So this is probably going to stay pretty quiet. Since we're so close to this line right here, maybe we'll break down and traverse one sector, or we just finish moving back up in this region right here. We'll just call it between 540 and 546 is the most likely range today, unless something really weird happens, like Powell says something incredibly market moving, which I highly doubt he's going to do. There's nothing else really going on today. So we won't bother. We already know what the momentum levels look like, except for maybe with yesterday's move. I don't think we looked. The SPY, we saw that it went up 0.21%, not much, really flat. But the RSP, what was really interesting is that is a huge bar down. It was down 0.8%. What that tells me is that the SPY was propped up by a small number of stocks. So what we might see is a change in momentum as measured by the number of stocks that made new highs and the number of stock that made new lows. If we have a huge disparity there, or we start seeing the number of stocks making new lows in the several hundreds, like not several hundreds, but in like 300 or above, then we have the chance of not being flat, of not just trading sideways. Let's take a quick look at that. I kind of doubt that we'll see that, but it's worth taking a look. 90-day highs 70 yesterday and 90-day lows 155. So definitely biased to the low side, but not enough to get us excited yet. And this disparity, about 80 or so, 85, it's I'm not quite large. It's medium. We'll call it medium. It's not small. It's not large. So we'll just call it medium, and so nothing to get excited about yet. But if with the downward bias today, this could increase, and this could go up to 200 and something. If it goes up to 200 or something, then we say, well, we have a little bit of continuation. And let's go back one day on the 90-day lows. We would go from 59 to 155. Presumably, almost all of those 59 were included in this 155. We just added 90 something. That also made a new low today. Well, if tomorrow or today after market, we see that there's 250, we go, oh, well, almost all of these 155s probably continue to move down for a third day, or I guess in many cases it would be a second day, but we would start to see a trend of movement downwards. And then we could start seeing, okay, which ones are starting to move down and which ones are starting to move lower. So this would be 2 something and then 3 something. And it's like, aha, now a very significant portion of that of the S&P 500 is moving downwards, it's trending downwards. We get to 400, 450, 400, then that's an extreme number, because that means the super majority of stocks in the index are moving down. And if the market is still holding flat, then that's indicating extreme weakness inside of the market. Most likely we're going down, but we don't have that situation yet. That's what we're going to be watching out for. Does this number increase today? Does it increase tomorrow? Does it increase on Friday? And if we see that number increasing while this is chopping sideways, that's going to give us a very strong clue that next week we're going to start seeing a downward bias and downward movement in the markets. That's something that we will watch very carefully this week, in addition to the bond market. Let's go back, sort of running out of time. Let's just do this really quick. So I'll just focus on home builders. It'll be a little bit easier to do that. So let's go ahead and find home builders. See if we can find a couple examples of super weak home builders that look like they're breaking down. Okay, so we are let's sort by our main average. Let's sort descending so we can see the weakest ones first. And look, that's already looking very weak. We broke or are at matching this low, but certainly for the open or close, we are below that. This is clearly the new low right here. Which one is this? DFH, Dream Finders Homes. Never even heard of it. This one is matching new lows right here. All of these are looking very, very weak. This one's Builder, BLD, or Builder's First Source. Floor Decor Holdings, look at that sharp drop movement. DHI looks like it's about to break or just broke the MA200. All of these are great candidates. This one might have been movement a little too fast. This one is still near. It's EMA 8. This one looks like it's about to break, so I want confirmation on DHI. Builder looks like it's ready to go. FND looked like it already moved without us. This one, let's see if it'll break that low. Same with here. Break that low. This one, break that low. So right now, out of the bottom 6, the Builder, BLDR, looks like the best candidate, best combination of exhibiting weakness and good timing. When we look for a trade idea, there's 4 steps that a professional will go through that retail traders or amateur traders, they just don't take for because they're not trained to do it, or you can't expect them. And there's no material out there that indicates that this is the regular process that professionals go through all the time. And it's not something that you would just stumble upon. Most likely, it's sort of like saying I'm an at-home chef and I'm great, talented, and I make excellent food. There's just going to be a lot of things that I don't know if I've never worked in a restaurant, or in a lot of things that I don't know if I've never been a line chef, and a lot of things I don't know if I've never been an executive chef. There are different tiers of professionalism within the cooking industry, and I've never had any of them. And so, yeah, I might make great tasting food, and I might be able to replicate some of what those pros do, but there's no way I'll be able to run a restaurant. There's no way that I'll be able to replicate everything that they do. So if I ever decide to open my own restaurant, I'm going to have a lot of challenges and a lot of things to learn. It's the same thing right here. This process that we went through, that I've been guiding you through, is a professional process that most retail traders will never even have a clue about. So what we did is we came up with a trade idea, a theme, a reason for us to be looking around in the sector. We talked about interest rates, the current interest rate environment, how that is affected by the Fed, and how the Fed's decisions affects treasuries, and how we see this big movement in treasuries and how that's going to affect home builders. And okay, so we have this idea, the trade idea, the reason why we're doing this. And then once we have this idea, we go and we look for timing. And that's what we're doing right here. Okay, well, let's look at the weakest ones over here. And we go, all of these look weak, all of these look great, but you know what? This one has perfect timing. This one does not, this one does not, this one does not, this one does not, this one does not. So we have our idea, we have our timing, and then next is, well, execution. Well, let's find the trade. Let's find the trade. So almost every retail trader will just, let's look for a trade. Oh, what do I trade? What's the next hot stock? What option should I buy? You're on the third step. You haven't done step one or step two. Well, some people are like, oh, well, let's look at the technicals. Let's look for bounces off of the MA200 or breakdowns of the MA200. Well, okay, you skipped the first step. You went to timing and then maybe execution. So maybe you got two of those steps. And then after that, once you're in a trade, you have trade management, risk management. So Builder is the one that's looking the best right here. We can confirm it on our larger view right here. This is all timing, market timing. Long-term downtrend, medium-term downtrend. We are near the bottom of our counter channels, but we haven't broken through it. Actually, we're actually only at our -2 ATR. So this is a nice, healthy trend moving down, not extreme. Our timing is looking very good. We just pulled back to their EMA 8 yesterday and bounced off of it. This is a very nice and very strong confirmation bar. Our timing is excellent in all of this. So now it would just be execution. Which option do I want to? Do I want to just short the stock? Do I want to buy a put? Do I want to go into a spread? Do I want a 70 delta? Do I want a 50 delta? Which do I want? How far in the money or out of the money am I comfortable? How do I make that decision? Well, part of it is timing. Time frame. Is this a day trade for me? Is it a 5-day trade? Is it a 1-month trade? There's so many questions that a professional will go through before they decide on a trade. And sometimes it looks like, oh, he just made that decision in 2 seconds and he just went and he executed. Looks like we didn't go through all those steps, but a professional is so well versed in it that they're able to make those decisions very quickly. And so you don't have to go through step by step. Today, I'm going through step by step and I'm eating up all my time. So I only went through the first 2 steps. We're going to have to end it here. We're 5 minutes away from the market open. So we'll leave it here and I will see you guys in the aftermarket session.